welcome to another edition of Business Morning. I'm Esther Ubodaga. Thank you so much for joining us. Now, the worldwide retreat from stocks and commodities following the U.S. ratings cut has driven the value of the global bonds market to a record high. Now, global bonds have racked up $132 billion in just 4 weeks, the highest in over 15 years. Now, right now, investors are just seeking the safest assets that they can find wherever it is, as growing concerns over the state of the global economy continues to weigh heavily on their minds. Now, it's been an absolute bloodbath at the equities market. We've seen equities plunging over $7.8 trillion in the last couple of weeks on the U.S. downgrade and, of course, the Eurozone debt crisis. Meanwhile, the U.S. Federal Reserve will meet today in Washington, and there are speculations that U.S. Federal Reserve Chairman Mr. Ben Bernanke may embark on another round of stimulus measures to help restore confidence at the market and, of course, support the U.S. economy. We'll be tracking that for you, and we'll give you more details as we get them. Now, let's kick off with the trading day, talking about the global stock markets. Let's start off with the Asian bourses, which are currently closed for today. The Nikkei 225 in Japan is down this morning over 1.68%. Now, Asia ends in a sea of red. Banks and technology stocks weighed heavily on the market in early trade. Now, lingering concerns over the ability of the U.S. and the Eurozone to come out of a debt crisis is still putting pressure on the Asian bourses. In Hong Kong, the Hang Seng Index also down this morning over 2% at 19,879.40 points. In China, the benchmark Shanghai Composite Index down 0.21% this morning at 2,521.59 points. In Australia, the ASX 200 managed to stay afloat this morning, not part of the bloodbath at the Asian markets, up 1.22% as we saw some risk appetite returning to the Asian bourse. Now let's go over to some early trading from Europe. The European bourses are currently about 2 hours into today's session. Starting with the London FTSE, it's down this morning also 2.31%. Now, we're seeing stocks in Europe also extending losses from yesterday. Now, heavyweight energy stocks are currently leading the decline at the market. Now, bond purchases by the European Central Bank on Monday has done little to calm the European market. We're seeing the Xetra DAX in Germany also down this morning, a whopping 1.95%. In France, the Paris CAC 40 also in the red zone this morning, down 1.57%. The Zurich SMI also following suit, taking a cue from the other bourses, down also 1.26% this morning. Now, analysts say they expect the European bourses to take a cue from Wall Street yesterday and close in the red today as more investors flee risky assets for less risky assets such as gold and treasuries. Now, Wall Street took another nosedive on Monday. Let's go over to the American bourses now to take closing numbers from yesterday. Now, this time, the Dow Jones Industrial Average fell by over 600 points. Right now, the Dow Jones Industrial Average is way below the market psychologically, the psychologically significant 11,000 points. Is down this morning at 10,809.85 points. The Dow has fallen from about 12,000 points in the last 2 weeks. Right now, it's currently trending just around 10,000. The S&P 500 also in the red, down a whopping 6.9% yesterday. Technology stocks, consumer discretionary stocks also were to the downside yesterday, dragging the S&P. All 10 sectors of the S&P bourse down yesterday to the red zone. It closed around 1,119 points. The Nasdaq also in the red zone for the technology stocks, also down significantly, down 6.66% at the close of trade yesterday. Now, the Russell 2000 bourse for the smaller cap stocks saw no activity yesterday. Investors completely ignored the Russell 2000, and that closed flat yesterday, still at 650.96 points. Now let's move over to the Nigerian stock market. Let's take stock of the local bourse yesterday. Now, the events in the banking industry over the weekend dipped the local bourse once again. So numbers coming down sharply on the first trading session for the week. The composite index lost 1.86% on Monday. also down below 23,000 points. The market, the index is now at 22,963.11 points. The NSE 30 tracking the performance of blue chips on the bourse, also down significantly yesterday, 2.16%. We saw the NSE leading the other indices in the red zone yesterday. The banking index, also tracking the 10 most capitalized banks on the bourse, also in the red zone yesterday, losing 3.66%. Now, that's in addition to the 6% that the banking index lost for last week. Now, let's move over to the insurance. Looking at insurance, also down 1.62%. Food and beverages, oil and gas, all we're seeing is a sea of red also from the Nigerian bourses. Now, let's look at the market broadly now. All 5 sectoral indices closed north. The banking index was down the most yesterday at 3.66%. The market capitalization shared about 138.93 billion naira and closed down at 7.3 trillion naira. Transaction volume at the exchange moved up by about 16.15% and closed at around 264.24 million units. Flour mills was marked down for a dividend of 2 naira. That's something for investors to smile about at the market. Now let's move over to what's making rounds at the global scene, talking about the market headlines. Now, as I mentioned earlier, the global bond market has been rallying the last couple of weeks. We've seen investors running away from the equities market to safe haven. We've seen gold rising to record highs. Right now, the global bond market has become investors' a favorite at the moment as a safe haven. We've seen the market gaining $132 billion as stocks lose about 7.8 trillion US dollars. Now, China says its inflation rate accelerated in the month of July. We saw consumer prices up 6.5%. And the yen affirmed against the US dollar in early Asian trade, up 0.4% against the greenback. Now, moving over to the commodities market, we've seen a steady decline also in the last couple of weeks on, of course, fears over the state or the growth of the world economy. We're seeing crude oil this morning down a whopping 2.93% and gradually slipping towards $70 per barrel. It closed around $78.93 per barrel in early Asian trade. Now, investors' favorite haven at the moment, gold jumped once again up this morning 2.17% to another record high of $1,750.40 an ounce. We've seen the bullion just racking up gains in the last couple of weeks as more investors seek the bullion as a safe haven. Sonny Nwosu, the president of the Independent Shareholders Association of Nigeria, is here with me, and we're looking at the recent development in the banking industry. But before we go into that, let's check quickly with the money and FX markets from Monday. Now, interbank rates dipped marginally at the market. We saw coal money closing lower yesterday at around 7.2%. The secured open buyback for the banks and discount houses also inched lower yesterday. We saw banks closing at 6.9%, while the rates for the discount houses closed at 6.8%. Now, the treasury is worth about 119 billion naira, will mature on Thursday, so that's more liquidity coming for the market. At the currencies arm of the interbank, the naira firmed against the United States dollar on some dollar sales from the Nigerian National Petroleum Corporation yesterday. The naira closed 152 naira 30 kobo to the greenback. While at the Central Bank of Nigeria's wholesale Dutch auction system, the first for the week, the Apex Bank sold $450 million at 150 naira 50 kobo to the US dollar. Demand, however, was higher at $452.79 million. Now we're looking at the nationalization of 3 commercial banks, talking about Afribank, Spring Bank and Bank PHB. Now over the weekend, they were handed over to the National Nigeria Deposit Insurance Corporation, and of course they now have a new management team. AMCON, the asset management company of Nigeria, is a main shareholder, and it will oversee the running of these banks for the next 2 to 3 years when new investors will be brought in. Now, shareholders of the defunct Afribank, Bank PHB and Spring Bank have been threatening court action against the Central Bank of Nigeria and the NDIC. Now, analysts have also accused shareholders of hindering the successful recap process. They say they should allow the central bank a free hand in the process to ensure that these banks come to a position where they can contribute meaningfully to the economy. Now, recap deals are still subject to shareholder approval, while investors are estimated to have lost about 30.7 billion naira. That's at the markets.